India's multipurpose personal finance app Paytm has had a historic but disappointing IPO. Shares in 197 Communications, the company that runs the service, fell as much as 25% on the first day of trading in Mumbai, although it did regain some of those losses. Investors gave the firm a lukewarm welcome amid concerns over its inability so far to turn a profit. That's despite the company's growing popularity and a customer base of more than 300 million people. Paytm started out as a platform for mobile top-ups in 2010, and over the past decade, its list of services has grown to include bills payments, e-commerce, and insurance. Despite the tepid reception, Paytm's debut is the biggest listing in India's history. The company raised $2.5 billion from new investors, and officials want to use that money to fund expansion plans outside the large Indian market.
Individually, I see it as an opportunity to build Paytm into a global, identifiable technology company. I see it as that today we are at a stage where we are serving India, and I think there is a tremendous opportunity of doing the same things in the rest of the world.
Now for more, let's go to Harish Bijoor. He's a business strategy specialist and joins us from the Indian city of Bangalore. Welcome to the program, Harish. Now, it's been a record-breaking year for IPOs in India. On average, other companies have seen their share price rise 23% on their first days of trading, but Paytm has seemed to have gone in the opposite direction. Why are investors so worried about this company and its stock?
Okay, firstly, I do believe Paytm is a good brand. It has an immense width in this country and gained traction, from 2010 to today, and gained traction during the era of demonetization when digital payments came into vogue. But what has happened today is reality biting into valuations. Paytm is a good company, wide company, 300 million plus reach, but an IPO is the ultimate bite of reality. An IPO, an initial public offering, the date of listing is like taking a piping hot pan off the fire and putting it under a jet of cold water. It'll sizzle furiously for a period of time, but then it will dim down. And that's exactly what happens at an IPO. And that's precisely what's happened with the discount that Paytm has attracted with this listing.
Right. Related to that, some of the initial investors like Berkshire Hathaway have reduced their holdings. Does it suggest that maybe the valuation for the company kind of peaked even before the IPO?
I do believe the valuation has peaked early. And I think, there was a fair bit of hype on several of our IPOs, whether it be Zomato, whether it be Nykaa, whether it be Paytm, because, there's a huge buildup for these unicorns. And the idea is that they can achieve plenty in the future. Reality is, of course, to say that, what is the future going to be and how is it going to roll out, how profitable a company is going to be eventually. So sustainability in this space is about building scale with profitability. So two phrases, building scale with profitability. Now, most unicorns have not been able to achieve that. They build scale and say that profit is not important, scale is important. But the reality in the IPO markets and in the real markets that govern financial markets is when are you going to be profitable and how profitable. So people buy into the future, not into the past or the present.
Okay, let's talk about that road to profitability. You're there in India, so you have a better idea of how Paytm works. Can you tell us about the service and how important it's become for customers, and maybe what other services the company can introduce to start making money?
Okay, the first part of my answer is to say that Paytm has got width. It has 300 million plus customers in a country, in a nation of 1.37 billion people. Now that's large. Paytm is ubiquitous in its presence in both urban markets, rural markets, and rural markets. That's beautiful. Paytm, however, is unable to go beyond this glass ceiling of numbers for the moment. Fundamentally, because India is a very cash-oriented country, post demonetization, the expectation was that we're getting into digital currency in a big, big way. We have gotten in there, but those small percentile points are not enough to change the market altogether. So the first issue is that can Paytm expand furiously in this market? The second is Paytm attempting too much? And that's a business question that I would ask. a particular mode of business must be followed, which says that I will focus. So, do you want to go focused and deep, or do you want to be wide? The suggestion always is to be focused and deep. And I think consumers are going to wait and watch how Paytm is going to deepen its business rather than widen its business. So the second question to say, what else must they get into? I frankly believe they mustn't get into too much. They must plan to expand this 300 plus million into a 700 plus million in the next 2 years. And if that's done, I think valuation will be back in the kitty.
All right. Harish Bijoor joining us from Bangalore. Thank you for the analysis.